You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break down everything going on in the world of futures options over there at CME Group. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging. Hope you enjoyed our big 100th Pro Q&A session spectacular yesterday, where we opened up the floodgates to all and sundry. If you missed the live session, we did put it up on the on-demand side as well. So if you're just listening to TWIFO, not listening to the full network, first off, what are you doing? You're missing out on a whole bunch of other content, including that great Pro Q&A session, which is usually limited to the pros. And of course, if you want to head on over, check out what the Pro has to offer, including, like we said, 100 Pro Q&A sessions waiting for you the second you sign up, as well as nearly 100 options out of these episodes, a whole bunch of early release, other Pro content, live streams to this, everything else we do. And of course, great giveaways like our Pro Trading Crates, which so many of our other network co-hosts take so much umbrage at because they don't get them. You folks do. TheOptionsInsider.com/pro is the place to go to learn more about all of that. As we learn who's joining us in the old CME Group hot seat today, I'm pleased to welcome back our old friend, Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to TWIFO, sir. It has been too long.
Well, it's great to be with you, Mark. I'm looking forward to exploring these markets with you today. A lot going on.
Yeah, there is a lot to explore, so let us get to it. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side this week over there at CME Group. You can see this report for yourselves if you follow us on Twitter at Options, or, of course, follow CME, they tweeted out right before showtime as well over there. All right, Mr. Dan, where should we begin our journey this week? To the light side or to the dark side?
Well, I have to say, I think the light side is very interesting, but how about starting with the dark side?
All right, to the dark side we go, listeners. And if you look at this chart that we tweet out this week, listeners, it is a little bit distorted by one contract kind of leaping off the chart. You'll see when we get there which one it is. There's a little bit behind the scenes going on behind that, so that may kind of obscure the rest of what you're seeing out here on the chart this week. But to the dark side we go. Number 5, listeners, starting off in the ag realm, in particular dairy, with Class 3 milk off 3.61% this week. Number 4, still staying in ags, it's the big dog, it's corn, off 4.51%. Right behind it, still hanging out in ags, it's soybeans, off 4.52%, so a whopping 0.01 ahead of corn, at least in terms of how much is losing this week. Number 2, off to the metals, it's palladium, off nearly 6% this week. It was number 1 in the other direction last week, up nearly 9.5%, so giving up a lot of that this week. And number 1 to the dark side, going back to the ags, listeners, soybean oil, off 8.66%, so a whole lot of ags dominating our dark side this week. Got a feeling we're going to be hanging out there a little bit. Now to the light side we go. We go off to energy, listeners. It is RBOB, up 3.41%. It was number 4 in the same direction last week, up 5.8%. So a good couple of weeks here for RBOB. Number 4, it's the Nikkei, the yen-denominated Nikkei there, up 5.85%. So getting a little bit of overseas equity action popping into the list. Number 3, it's Eurodollars. Eurodollars keeps popping up on our list because technically it is still available for trading over there at CME, listeners. We all know a lot of that interest has shifted, though, over into 3 months. So for nonetheless, Eurodollars this week up 7.02%. Number 5 in the same direction last week, up 5.71%. Number 2, back to the energy. It is Nat Gas, up 7.76%. And number 1, getting to that one product, listeners, that is a little bit distortive on the chart this week. It is lumber. You know, dead trees, we've been saying for a while, dead trees, the most volatile asset class post-pandemic. You know, everyone talks Bitcoin or Nat Gas or maybe some crazy equities, and they certainly have moments of volatility, but sustained volatility for the last few years, man, nothing beats lumber. It is rocking and rolling and moving a deceptive 101.3% this week. I think there's more to unpack there, though, listeners. I think given the fact that we've got softs dominating the light side, and then we've got pretty much all ags dominating the dark side this week, listeners, we've got to get into the ags first.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everyone. Welcome to the wonderful world of ags. They're easy to find in that drop down. Just gone over to our favorite page, cmegroup.com/TWIFO. Well, maybe second favorite after theoptionsinsider.com. Right behind it, cmegroup.com/TWIFO, because that gets you access to all of these reports. And then, of course, click on the asset class, and it's right at the top of the list there is ags, easy to find. It's an alpha order list. And then from there, where we're going to go, it's kind of a dealer's choice. Mr. Dan, I think we have to start with that number that's kind of jumping off the list there. It's lumber. We've talked about it before. It has a lot of underlying movement, doesn't do a lot of paper to correspond with that. CME has tried for a while to try to remedy that. They had a more bite-sized contract come along recently. And I think what's gumming up the works here on the data side is now we're finally seeing that old contract, that old lumber future, the one that really had a lot of just volatility across the board throughout the pandemic, finally going the way of the dodo this week on Monday, getting replaced by a new contract. CME for a while has been trying to attract more interest in the space for obvious reasons. The underlying is moving. Just whatever reason, they can't generate the liquidity and the volume to match the underlying movement. But they're trying to attract more people, so they're creating a new contract out there, which, again, is already up and running, trying to deliver it to Chicago as opposed to British Columbia. Different amounts as well, enough board feet to build a house. So there's a lot going on behind the scenes to try to make lumber a little bit more palatable, I think, for the average trader out there. But Dan, you watch these markets on a day in, day out basis. What are your thoughts on the old lumber contract going the way of the dodo, the new future taking over, and the fact that it's distorting the hell out of our rankings this week, sir?
Well, I think it's logical. And I think it was a great move on the CME's part. There's been a lot of changes in the lumber industry in the United States. And so do you have a contract that reflects, let's say, the housing industry? Not really. What the old contract really didn't do that. The new contract, I think we have a chance to do that. We've seen changes also in the lumbering process in terms of mills, the differences between the northeast coast to the northwest coast. We've seen some dramatic changes there. Also, if we look at the products that come out of there, that hasn't changed too much in terms of fir and pine and those kind of products that come out of, let's say, the northeast part of our country. So I like the idea that we have a contract that looks at the 2x4 type delivered product to Chicago. I think that's important too. So we're seeing something that I think could be more reflective of the fundamentals that you and I read about. So if the housing numbers that we look at, if new construction, or let's start with new permits, if building permits are going up, is it reflected in the lumber contract? If new housing construction is going up, is it reflected in the lumber contract? The unfortunate disasters that we've had in parts of our country from storms and tornadoes, is that reflected in the contract? I think the new contract, and it remains to be seen because it is new, would be more sensitive to the fundamentals that you and I see floating out there. So I think it's a step in the right direction. It's just a matter of, getting its sea legs on in a sense. But I think it's going to be more reflective of the fundamentals that you and I read about, that we see when it comes to that product line.
I mean, how many times, Dan, have you and I talked on this show about, man, lumber's moving again, and yet no options volume whatsoever? Obviously, they see that at CME as well. They knew this wasn't resonating. Again, if you run the numbers back to the start of the pandemic, I'd be hard-pressed to find another asset class that was more volatile than lumber since the start of the pandemic. It's been all over the place. And yet, for whatever reason, that hasn't translated into a lot of trading volume. So maybe, again, they had the more bite-sized contract earlier that they launched. Now the kind of the old contract rolling off the board. Maybe this combo will finally translate into a little bit of options volume. Too soon to tell yet. Obviously, this changed, very new listeners. But intriguing. I'm curious for you folks. Maybe this will be a good question of the week. Are you folks, we talk about it almost every week. It's moving almost every week. It is one of our 3 frequent offenders, literally every week. So, and again, this week we have 2 of them. We have lumber and nat gas. All we're missing is Bitcoin this week. Is this a product that intrigues you from an options perspective? There's certainly movement there. There's volatility to be had. Yet, for whatever reason, not exactly translating into a ton of volume. Again, maybe this new contract lining up more with some of the needs of the market. Maybe that will help drive some paper. Are you intrigued by this product? Do you wish there was more options volume you could sink your teeth into? I'm curious. Send in your thoughts, listeners, as we keep on rolling to the rest of the ags complex, which, toss aside that crazy lumber number for a minute, the rest of the ags complex, pretty much in the toilet this week, led very much by corn. Corn just blowing the doors off this week in terms of volume. 714,000 contracts on the tape. Usually this time of week, we see about 400,000. So nearly 2x the usual volume we're seeing in corn right now. Where is corn hanging out right now, listeners? 554, off about 32.25 or 5.5% in that front future. And of that nearly 715,000 contracts, about 30% going up in the July contract, has about 36 days to go. So we're going to hang out there, listeners. What is the vol in corn? Corn's getting pretty frothy. It's at a 29, listeners, up 4.5 points this week. So again, in an era when we're seeing VIX at a 16 and a lot of the other products we're talking about below 30, threatening a 30 right now in corn vol, that's nothing to sneeze at. We talked before of some folks who are coming over from more equity option-centric trading. They're looking for a starting point in the ags. We said it before. We'll say it again. You could do a lot worse than corn. It's liquid. There's vol to be found here, nearly 2x what you're seeing in the broad equity indexes right now. And again, paper for days, including, we'll get to all that fun contract fun in a second. Let's get out here to the skew right now in July. The puts last week, nobody wanted them, about 2% cheap. And they're about 2% bid this week. So they've swung pretty much almost 4 points in the other direction. Last week, it was all about the calls. The calls were nearly 12% bid. Of course, we had Rich Excel on the show last week. We were talking about the upcoming crop report, so a lot of action ahead of that. A lot of that has now faded from the system. The calls are actually 1.8% bid, too. So we have a nice little small smile going on out there in July corn right now. Both wings nearly 2% bid. So again, that translates to what is the volatility premium for the 25 delta put and the 25 delta call over that at the money strike. And right now it's about 2 points in either direction, which means, again, corn kind of balanced on a knife's edge. Options market not really saying which way it's going next. No market bias in either direction. I'll break down some of the paper in a second here first, but Dan, I know you like to watch a little bit of corn out there. What's catching your eye out there in the corn market these days, sir?
Well, it's fascinating. And, it's a market that needs an excuse to do something. And right now, everybody was, as you mentioned, everybody was waiting on the sidelines actually for the last couple of weeks. We were waiting for the market to make a directional move from 572 to 6. It's basically where we've been for quite a while. And we are in that range, and you could see it when you look at a chart from the way I look at it anyway. It says when we got to 572, you'd see buyers coming into the market. We get to 6, you'd see sellers coming into the market. Then typically in an ag, when you see that kind of behavior, oftentimes it's a market waiting for information, and it could also be people hedging their positions, which keeps us kind of in that sideways market, waiting for something to happen. Well, yesterday it did, and that market finally broke to the downside. The issue is it sustainable? And I think today's action, if you're on the short side of that market, I'd be cautious here. The way we could go into the weekend, are we going to stay weak on Friday? Right now, if Thursday is finished, actually, I'm looking for an update potential for Friday. So the selling we saw coming in may be short-lived. So if you and I were, let's say, long puts, I'd be cautious here. You don't want to see an update going into the weekend. That implies two things for the corn market. It could imply for the last 3 days that we've seen sellers, they're now buying it back. They're covering their position before they go into the weekend. If we see bullish action on Friday, it also implies that maybe we did get cheap enough that people are now buying this product. So those two scenarios, I think, could be unfolded not only in Friday's action, but do we continue on Monday? So if we have an update on Friday, then Monday would tell us if we get follow through to the upside, that did get cheap enough to find buyers. If on Monday we have a quiet day, it goes sideways or even weaker, that would imply sellers are still in control and there may be some more room to the downside. Now, that's, I think, from a price point of view, but then let's think about it fundamentally. Does corn at this point have a reason to rally? Now, what we do know is that the Ukrainian situation, which we'll also see, reflected in wheat, we want to remember with corn, people oftentimes ignore that when it comes to Ukraine, but it supplies 60% of the corn for the EU. So it is significant for that, provided they can get the product out. And it looks like right now, Russia said, hey, and Turkey has come back and said they're going to extend the export agreement for another 60 days. So that also has some downward pressure on the eggs that we're looking at. And if we take a look at our friends in South America, Argentina's had drought issues. So their beans and corn don't look that great. But Brazil, on the other hand, look terrific. And one more factor when it comes to corn is let's switch over to China. China, who had ordered some corn has now backed away from some of those deals. That also means, do we have excess corn in this country? Is some of the carryout from last year not being absorbed as being contemplated? So I think all those fundamental issues are also reflected in the prices that we're looking at. So I think down markets right now in these grains kind of make sense.
Let's get out to some of these markets, listeners, and see what's lighting it up. To corn first we go. Like we said, the vol is interesting. Let's see what's interesting from a volume perspective. And right now, it's the July 620s. Kind of a surprising strike. We are trading, like I said, at a 554 right now in that front future, listeners. But the 620s in July leading the dance, nearly 19,000 contracts on the tape. Kind of active all week long. The busiest days actually yesterday and today, pretty much equal, about 5,100 on the tape yesterday and today, slightly closing yesterday. You obviously don't know today's bias. Tuesday, 4,800, mostly opening, and 3,900 on Tuesday, mostly closing. So back and forth, opening to closing on the 620 strike in July. Again, if you had asked me before the show, I would not have guessed that, which is why we run the numbers every week, listeners. Right behind it, we have the 600s, 15,000 of those going up this week. Unlike the 620s, mostly active on Wednesday with the pars, 7,200 of those, and then 4,600 on Tuesday, and about 1,600 each the rest of the week. Looks like mostly opening on those. So there could have been some roll down paper on the 620s down to the 600s potentially, but it doesn't really line up that well. So intriguing stuff there. Then right behind it, we have the 550s. Now that's more along the lines of what I expect. The 550 puts, that is now the at-the-money puts, trading almost 15,000 contracts this week, 5,300 today, 4,500 on Wednesday, 3,000 on Monday, and about 1,800 on Tuesday. Opening earlier in the week, closing yesterday. We'll see what today's volume holds in store for us. But that makes some sense as we're falling towards that strike. People are putting on the puts. Then when we start to get there, they take the puts off. They've made some of their money after all. So intriguing stuff nonetheless. Then we have to jump out of July, listeners, and go all the way down to December. By the way, that D's future trading at a 500 even right now. So a little bit different level out there, which is why, and also about a 27 vol, so a little bit lower vol down there as well. But that also explains why the 470 puts are lighting it up out there this week. You might look at that and say, wow, 470, that's a long way off. But again, the D's future trading right around 500, so a lot closer than the 5.5 level we're trading in that front contract right now, listeners. So the 470 puts going up about 10,000 times this week. Most of that Tuesday and Wednesday, 4,700 each, Tuesday and Wednesday. Closing on Tuesday, opening on Wednesday. So intriguing. Usually you see that backwards as we're selling off. You see opening and then closing as you get closer to it, but not seeing that this week. And then not much to speak of the other 2 days of the week. So really just 2 days. And then right behind it, we have the 600 calls and the 500 puts, each of them doing about 9,300 contracts this week. All of that in December. So a lot to unpack there in corn, which is the big dog of the week from a volume perspective. But right behind it, listeners, we have the number 2 contract. I know for a lot of you out there in the ags, it's the old soybeans. We've been talking about soybeans for a while now, the different components, soybean oil, soybean meal. This week, we're going to focus on the beans themselves. They are number 3 on our dark side movers and shakers this week, off about 4.5%. And a pretty busy week out there in soybeans. Again, 476,000 contracts. That is nothing to sneeze at. That is pretty much corn volume on a normal week, if not a little bit more so. So impressive stuff out there. Coming into start of the show, soybeans at a 1332 3/4, off about 57.25 points on the week, a little over 4.12%. Obviously, if you go off to the end of last week's show, it's about 4.5%. So most of that sell-off coming this week here, listeners. And again, the most active contract, unlike corn, which was focused more on the July contract, so within 30 days, going a little bit farther out here in the beans, going all the way out to November. We're about 36% of the paper going up out there this week. Dan, it's been an intriguing time. A lot of ags dominating our dark side this week. What is catching your eye out there in the soybean market this week?
Well, on that one, we're seeing something similar to what we're witnessing in corn. Although it's been more volatile, beans have been more directional than we've seen in corn over the last 2 days, previous 2 days. Today, it's stopping to catch its breath. We're not seeing the same enthusiasm to the downside. And it's what I call a potential transition type setup. So just like with corn, if you're on the short side, you'd want to see an inside day tomorrow or weaker, ideally closing around 1320. That would be great going into the weekend. So people are staying short. That's what that would say to us. An inside day or a close around 1320. However, if we get a bit of a rally going into the weekend, so that means we close around 1335 to 1340, 45 in that range. If we saw something like that, then who is covering those positions? And Mark, that's what I love when you talk about the open and closing positions, because it tells us something about the attitude, doesn't it? It gives us a feel. What is the level of commitment that we're seeing? So I think in our friend, Mr. Bean, that close on Friday is going to be an interesting barometer for next week. If we close, we have a positive close. Let's say it's above 1345, someplace in that range. Then it goes back to what's causing that. Is it the sellers we've seen the last few days now covering positions? Are they ringing the cash register going into the weekend? Or is this cheap enough that buyers now want to start coming back into this market? They feel it's a good day. It's been a while since we've been down in this range, by the way. The last time we were around 1340 or so was last year. It was in June and August, or July and August, right in that time period. So we're at levels that we have seen buyers before. So then let's say we have that positive close. Then I think the thinking would be, all right, on Monday, do buyers continue? Do we see a stronger close? Are we closing above 1350 to 1360? Ooh, that could be the beginning of a transition to a rally, to a market that's going to move up. If, on the other hand, we see a positive close on Friday, but Monday it heads right south again, so sellers are staying in control. And then again, the fundamentals. Are there fundamentals out there that would support a rally, a strong up move in this market? And if it does start to move up, it means, if you're going to look at a balanced move from a technical point of view, by Wednesday or Thursday of next week, you want to be closing or trading above 14 even. So you want the market to go out the way it came in. It went from 14 down to 1340 in 3 days. So you'd want it to retrace the same if you're looking for that rally. If we do something less than that, so by midweek or towards the end of next week, if we're around 1380, let's say it does move up a bit, it's not necessarily a strong sign of continuation to the upside. So I think there are some references that you and I can pay attention to in our friend, Mr. Bean, to give us some ideas of how we want to manage an options position. And I think for me, when it comes to options, I always think about it in terms of time. That if I was looking at a bullish strategy, whatever, a vertical or just buying calls, let's say, then I want to get paid. I don't want to make a donation to the market. And to me, that means if you and I set up a bullish or bearish strategy based on some technical idea, I use candles, but it could be something else, and you're not getting paid in 2 to 5 days, I give it the big adios and stand aside. Take that premium back, look for another clean opportunity to now make another attempt to see if the market will cooperate. So these ags are really an interesting position.
Go check out some of those positions, see what the options are telling us out here in soybeans. Listeners, like we said, 1332 3/4 in that front future But the lion's share of the options paper in soybeans this week is actually out there in November. So we're going to hang our hat out there. The future there is a little bit lower, 1186 this week. In terms of vol, what is the vol in November? Soybeans, 1940. So a little bit below that front contract. Again, that's going away in about a day. That's about a 25.70. So a little bit higher, but then again, vol, 1 day to go. Kind of a bit of a meaningless number. Look at all the debate over 1 day VIX right now. What does that really mean? So a lot of analysis, a lot of debate on 1 day volatility. We won't do that right now. Instead, we'll go out to November. See what's lighting it up out here. Again, 1940 is the vol. They're up about 1.3 points. So on the lower end of some of the vol ranges we've been seeing lately, but still decent for all things soybeans. In terms of skew, last week, kind of a crazy week. We, of course, had the reports coming out. So we had a pretty steep discount to the puts, 4.6% cheaper the puts, and the calls were 14.7% bid. So just an astronomical bid to the upside. So that's a very favorable setup for things like collars. You buy cheap puts, you sell expensive calls against your future you're holding. That's kind of a recipe for collaring. This week, most of that is gone. The puts 1.2% cheap, and the calls 2.5% bid. So again, mostly flat, slight bid to the calls right now, but mostly flat from a skew perspective. So right now, the November beans are not really showing us a heck of a bias in one direction or the other versus last week. It was all upside all the time. And in terms of action, listeners, leading the dance out here in soybeans this week, it was the November 1160 puts. Remember I said we're at an 1186 right now in that future. 1160 puts doing 23, almost 24,000. In fact, it looks like the 1160 and the 1060 puts were kind of trading in lockstep this week, but not really rolling down. It doesn't seem like they were both opening and closing in similar amounts on the same day. So it seems like there was an 1160, 1060 vertical that was trading a lot this week, opening on Monday 5,500 times, and then closing on Tuesday about 13,000 times, and then closing again on Wednesday about 3,600 times, and a few hundred more today. So some folks bailing on this 1160, 1060 put spread after putting it on earlier this week. Again, they got the nice movement that they wanted out there. Again, it's all the way out in November, so they had the move they wanted. Whether that was enough, not a lot of bang for your buck from a gamma perspective in a November 100-point put spread, but c'est la vie. Looks like they put it on Monday, took a bunch of it off. Still about 8,000 open on both of those strikes, or close to it, a little bit less on the 1060 puts. But that's what's leading the dance out there this week, which is why November is dominating the tape. It's that put spread, listeners, doing about 44, almost 45,000 contracts between the two strikes. If we get past that, listeners, we also have the 1100 puts also in November doing about 16,000 contracts. It's like people were bailing on those pretty much all week. The big day was Tuesday, 6,500 on Tuesday, 4,900 on Monday, 3,600 on Wednesday, 1,100 today. Again, pretty much bailing on these 1,100 puts all week long. So no love for those. And then right behind that, we have the 1,400 calls back in July. So there was some upside going up. Those going up about 11,600 times. Again, the big day for those was Tuesday, 5,500 on Tuesday, 4,500 on Wednesday, 1,300 today, and only a couple of hundred on Monday. And unlike the puts we just talked about, those are pretty much opening all week long on the 1,400. So maybe some folks looking for, or perhaps betting against, a little bit of upside there in July beans here, listeners. We got to keep on rolling. A lot going on in ags this week, but we have more going on in our movers and shakers, including one of our frequent offenders, Nat Gas, coming in number 2 this week, up 7.76%. So let's head out to energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, off to energy we go. Pop out of the ags and that drop down, go down 2 slots to energy. Then in product family, you're going to go down 3 slots to natural gas. And then right at the top there, you will see nat gas, listeners, which coming into the start of the show, looking a little bit more robust than it was the last time Dan and I were chatting when it was threatening the 2-handle. 262 in that front future this week, up 35 cents or nearly 16% just this week. Of course, you go back to the end of our show last week, up about half as much, about 7.76% on the week. Still a robust week, pretty much any way you carve it. Dan, you know, this has been a product that has mystified you and myself, really, on the show here for a while. Seems like every time you're on, we're talking about all this paper at the 2 strike and below here, and now nat gas is circling the drain. A little bit of a lift this week. What are your thoughts on this? Is this a bit of a reprieve here in nat gas? Can the bulls finally rest a little bit easier, or is this just the calm before another storm, another flirtation with the 2-handle, sir?
Well, you are right. We have been talking about this for a while because, excuse me, the fundamentals and the price action just didn't line up. What we were seeing fundamentally, the expected demand to come in, really hasn't. And first, when it comes to China, we expected an increase in demand as their economy gets turned on. We haven't seen it. And it's reflected in other markets as well, like copper and some other markets. But when it comes to nat gas, recently meaning today, we're seeing something very clean. But in terms of how it moved above previous highs, the big level of resistance for that market was around 250. It cut right through it today. So that's impressive. I don't expect the same kind of move tomorrow. The expectation for a move to the upside would be around 265 to 270. So I'm not looking for the same kind of volatility that we had today. So if you're on the long side, or if you haven't gotten in and you're looking for another screamer, I don't think we're going to have that. The market has kind of absorbed some of the fundamentals out there. And what helped drive this market today, fundamentally, it goes to our friends in Canada. We import more energy from Canada than any other country by far. And crude oil is one of them, and the other one is nat gas. And in the Alberta area, they've had some fires. And so some of the oil production, some of the tar sands and some of the other areas, they have had to shut down. And that decreases the amount of gas that we do get from Canada. And we've also had, what that does is it puts some pressure on that. And we've had less nat gas in storage than expected also. So that could help boost this up. And I think one of the things when we think about what this market implies to us, futures do just that. They give us an idea of the market's opinion about the future. And one of the things we've had coming out is a warmer than normal weather forecast. And so let's talk about how that fits in. What does that have to do with nat gas? Well, if we think about how we consume nat gas in the United States, we, except the northeast part of the United States, they use heating oil. But we use it to heat our homes and to cook our food. That's about a third of the natural gas consumption. We use it industrially. The metals industry, steel making, and chemical industry, they use a lot of nat gas. That's about another third of our supply. The last third goes to electricity. So if people start turning those air conditioners on, we're going to start consuming that nat gas. We produce more electricity in the United States with nat gas than we do with coal. So that's why that kind of gets connected to that weather forecast. We've also had some LNG facilities that were shut down for maintenance. And so that also builds some of our supply back up. But the expectation is that's going to be leaving the country as well, too. And the way that process works, natural gas is a gas. So those molecules, float around and they're a gas form. But if you take those little guys and squeeze them down under a lot of pressure and you make it very cold, they don't move around as much and you get a liquid. And those processes are something that we do in the southern part of our country, especially down in Texas, Louisiana, and we have export facilities there that can export that LNG. And we've had some changes going on down there. There was a fire at a facility in Texas, the Freeport facility, which is now back online. So the issue here now is what we're seeing sustainable. And we're approaching that if we get above 270 and we do it with volatility, meaning not so much tomorrow. Again, I don't look for that tomorrow, but on Monday or Tuesday, if we see a close near that 280, 285 level, this could be the beginning of a sustainable move. But so the price action you see Monday, Tuesday of next week, I think is really going to be important. And tomorrow, don't be surprised to see an inside or lower close type day. If you look at nat gas over time, for the last few years really, when you have a move like we have today, the probability of having another move like this is very small. And the probability of having a weaker close tomorrow is also fairly high. So the expectations for tomorrow is not a huge amount of volatility, and it may provide a position that you and I could use some options to set up a strategy. But I still believe that 2 to 5 day window is important to me. If you're looking for a swing trade, that type of trade, you want it to be sustainable. And I think that window of time is important to any option strategy that I would look at. So it's a very interesting market fundamentally because we're seeing this potential for increase in demand in our country. When it comes to European demand, that really hasn't changed too much. We're not seeing much there. But don't forget about Japan. Don't forget about China. China, we're also not seeing the demand that we expected, but that may change. And if it does, then we could see some fundamental drivers also pushing this market.
Let's see what's pushing the nat gas options out there this week. And a lot of volume going up. 657,000 contracts on the tape. Again, that's nearly 250,000 more contracts than we typically see this time of week. So another banger week here, this time in the nat gas options. So a lot of activity lurking over there in the CME options this week. And of that, 30% almost exactly going up in the July contract. Has about 40 days to go. In the past, we've seen more paper. Actually, right behind it, we do see the June contract has about 7 days to go. I was going to say, usually we've seen a lot of the focus on the high gamma contracts for obvious reasons. Dan was just breaking down the big move we saw there today. You want to have a high gamma contract to capture that. So 29% is in the June contract and then 30% in the July. So very front loaded here in the volume, which again is kind of what we've come to expect here from nat gas. Right now, let's go out to July 1st. Again, has about 40 days to go. That future at a 273. The front June future going out in about a week. That's at a 262. Both of them up strong this week. Out to July right now. What is the vol out there? 65. That's up about a little over 6 points on the week. If you go to the June future with 7 days to go, that vol's at a 74. So even juicier, up about 10 points. In terms of skew, not a heck of a lot going on really in either contract, except for a little bit there in the June. We'll do July 1st. Last week, the puts and the calls were both a little over 1% bid. This week, all that's gone. Both of them are pretty much flat. So right now, July nat gas options are telling you we don't know what the hell's going on in the future. Of course, it said that last week too, and we still did see a big move. Also in the June options, we had the puts last week, 1.2% bid. The calls were flat. This week, we have the puts 1.8% cheap and the calls 4% bid. So a little bit of a bid to the upside in the nearer dated contracts there in nat gas. In terms of action, though, in terms of leading the dance this week, it was the two puts in July doing about 30,000 contracts. Dan said we had a banger day today, and we're seeing a lot of volume today as a result. 14,000 contracts going up today, 7,000 and change each Tuesday and Wednesday, about 3,000 on Monday. Back and forth, opening to closing all week long. So once again, that two put strike, I don't care what month it is, remains a source of fascination for traders. Even as we rally away from that strike, folks still piling into and dumping the two puts in just serious volume out there. And then right behind it, listeners, if we go back to June, we have the 2.5 calls. So it's not all puts all the time. It's the 2.5 calls, which is kind of more along the lines of the paper that I expected given this move we've seen out here this week. They did about 23,000 contracts. Again, the big day was today, 10,000 and change going up today, 5,200 on Monday, and 3,500 around there each going up on Tuesday and Wednesday. Opening earlier in the week, closing later in the week, again, makes some sense as we get the move we wanted out here. People starting to take some of those off, even though today just a banger day out there as well. And not to be outdone, though, in June, also the two puts trading it up, nearly 20,000 contracts, 19,000 and change this week. The big day for those, though, not today, was actually Monday, 6,500 on Monday, 5,200 on Tuesday, 4,500 on Wednesday, and 2,800 today. So ever decreasing amounts. And it's like a little bit of opening on Tuesday, but mostly closing throughout the week. So folks bailing on the two puts, that makes some sense there in the near dated contract. So yeah, a lot of action here in nat gas. Let's go back to July really quickly, see what else is lighting it up out there. We also have the 210 puts. That's interesting. Don't see a lot of those lighting it up. Doing about 16,000 contracts. Again, almost all of that today. 12,000 today, 4,000 on Wednesday, and just a couple of dozen the other days. So a lot of closing yesterday. Not sure, obviously, about today's paper, but probably a bias towards closing there as well. And then behind that, we have the 2.25 puts doing about 13,600 contracts. Similar story. Half of that today, 7,700 today. A little more paper throughout the rest of the week, though. 2,100 on Wednesday, 2,600 on Tuesday, 1,100 on Monday. Surprisingly opening all throughout the rest of the week. So a lot of opening paper in the 2/4 puts, and then big move today. Probably a lot of closing there as well. So intriguing stuff for nat gas. Going a little bit farther out, don't see a ton of interesting paper unless you're really intrigued by the 7 calls. Trading in April and May of next year, 1,600 times. Actually, like the 7 call strip went up this week, 1,625 times. Looks like it started in April and went all the way out to October of this year. So there you go. If you're interested in a little bit of upside in nat gas, you've seen those strips go up a lot. Usually it's around the put side, the 2 puts, maybe 3 puts back in a little bit earlier. Now, 7 calls, 1,625 times. So intriguing strips to be found here a little bit farther out here in nat gas. Dan, we're kind of coming up against it. We probably got time for one more complex. We still have some rates, maybe some equities lighting up our movers and shakers this week, or perhaps another complex that is on your radar this week. Where should we go next, sir?
Gosh, that's a toughie. Can I make just one quick comment about?
Go for it.
Well, to say crude is logical today too, and it goes back to interest rates. It also goes back to currencies. When you see a stronger dollar, you just want to remember crude oil and nat gas trade in U.S. dollars. So when the dollar's stronger, it oftentimes can put a little pressure on crude oil. If the dollar's weaker, then you look for an incentive for crude oil to move higher. And today, I think it's very logical. So are interest rates, Mark. I mean, should we do interest rates or should we do equities? Do you want to? You are our guest.
You said crude. If you want to finish up on crude, we can do that too. Crude would be number 7 today, up 1.86% if we expanded our movers and shakers this week. So crude moving too, and WTI if you want to go there, sir.
Well, I have to tell you, those 3, the ones you mentioned, all fit together. If we look at crude, we have those drivers, as I just mentioned, kind of influencing here. The U.S. dollar stronger, we had to build an inventory. Interest rates, if you look at bonds and notes, they're down, which makes sense because if you look at the stock market, those markets are up. And as those markets move up, it's risk on time. So that means money comes out of the interest rate markets and goes to those equity markets. So that relationship is really very balanced today. It's moving logically. And so is our friend, Mr. Crude. The way it's behaving, I think it's logical. To me, crude oil is fairly valued. I don't think there's a strong reason for a huge rally or a big break in this market. A sideways move here I think would make sense, over the next few weeks at least, to stay between $70 and $75, just a sideways type move. Because fundamentally, I don't think we have drivers out here right now to really justify fundamentally a dramatic move. So I think volatility where it is right now, it could stay there for a bit. And maybe that's an idea, is to sell some volatility to take advantage of a sideways market if indeed what I'm talking about stays. So we wouldn't want to see it above $74, for example, to the upside, or below $69 on the downside, to be more specific. And if we stay in that range, well, maybe it is a time to look at selling some premium with a light touch, that if we get beyond those parameters, we give it the big adios and stand aside.
Big adios indeed. Looks like folks are giving the big adios to crude oil from a volume perspective this week as well. All the action is in nat gas, it seems like, out there. Crude oil only doing 220,000 contracts, so it's roughly half of the normal paper we see this time of the week. So you won't spend a ton of time out here. Crude at about a 72 right now, as Dan alluded to. Maybe hanging out at fair value in your mind as well, up about 2 points this week. The vol, 35 3/4, down about 3 points. It's the July contract where about 37% of the paper went up, and the big dog out there are the 80 calls doing 9,400 contracts this week. But you know what, Dan, before we get out of here, you touched on rates, touched on a couple other products, and that's kind of what our question of the week was last week, and it had some interesting results. I want to get your thoughts on that next.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, listeners, welcome to the feedback segment. You folks know how to reach out to us, really, I should say. At Options on most of the major social media platforms. Questions at theoptionsinsider.com also works. Of course, if you're listening live, you get bumped to the top of the list via our Mixlr live chat there. And last week, we had an interesting question of the week, and I really want to get Dan's thoughts on this because it really touches on the crux of what we talk about here on this show, which is all these different assets that are trading out there right now that we touch on this show. Where are you folks putting your money these days? We asked you last week, in these troubled times, where are you allocating the majority of your portfolio? Gave you 4 choices. Well, really 5 if you, one of them is kind of a split one. We gave you cash, crypto, equities, or commodities/fixed income. And Dan, when the dust settled out there, our very savvy, very options savvy audience came down nearly 50%. 45.6% of them said they're in cash right now, at least the majority of their portfolio is. 32.4% said equities. 19.1% came down on commodities/fixed income. Only 2.9% for crypto. So I'm curious, Dan, those numbers kind of surprised me. Do they surprise you that so much of our audience is in cash right now? And what are your thoughts on that allocation?
Very interesting, for one. But I think it's reasonable. If you want to be able to sleep at night right now, and if you feel so many things are up in the air, we're doing the political dance on the debt right now, the debt ceiling, and hopefully next week, as they've been talking about, that'll be taken care of. There is a lot of uncertainty out there, and that is a place to put some money when you're feeling that uncertainty, to go towards cash. But, the thing too, Mark, especially the things that you talk about, and that is the option side, or, the future side. You got markets that trade 23 hours a day. So you have a safety net built in when it comes to futures or options. If you're selling options, you still have some safety net there. So I think that can create a certain degree of comfort. Depends on someone's attitude towards that. But gosh, I would have thought that the cash would be a bit lower than that, actually. But it also goes back to size of portfolio, of how much someone has exposed. I'm fairly exposed to the market. I'm probably around 70%. But that doesn't mean it's a good idea either. But it is an interesting number. The crypto number isn't too surprising. And as you and I have talked about before, Mark, if I was going to touch crypto, I'd be at the CME group. I think that's the only place to really trade crypto. To do it in the cash market, I don't trust the players out there. And if you have a problem, you're stuck. Where at the CME group, you have a problem, you got your broker and you got the exchange if it's something really crazy. So that's important to me, to have that kind of security. So on the crypto front, if I was going to get exposure, that's where I would go on that side. But it's interesting what it says about the attitude that people have right now, and the degree of, I don't know if discomfort's the right word, but what is the attitude? How do people feel about where we are? And all kinds of things bleed into that, right? Politically can have an influence, and the economics that are driving the global situation can have an influence. The Ukrainian situation is still out there, and we have people in China and North Korea and Iran and other places that are still bubbling. They're still creating that potential uncertainty. Do you think that the 45% is a high number or a low number? What would you think about that one?
Yeah, that surprised me. That was pretty high. But again, I certainly understand it. As you mentioned, to be able to sleep at night, you can't undersell that at the end of the day right now. And also, obviously, cash, a little bit incentivized, getting some decent rates in most of those money market type accounts out there. Obviously, inflation eating into that, so something to be aware of. But that is attractive to a lot of people. And also, as many of our guests have said recently on the network and on Pro Q&A, there is a certain optionality to cash as well, where if you're sitting in cash, it allows you to pull the trigger whenever you feel comfortable. So you're not really pressured, you're not buffeted by the slings and arrows of the market day in, day out. You can choose your moments, and there's a certain attractiveness to a lot of people for that as well. Unfortunately, Mr. Dan, that music means we have come to the end of another epic sojourn here on TWIFO. Hit on a lot of ags this week, including corn, including soybeans, and a little bit of the old softs. The mystery that is lumber. Will this finally be the turning point? This new contract taking hold, taking root out there. Will this finally be the moment where we start to see lumber trading some appropriate volume? I suppose we'll find out also a dalliance out there in energy, a little bit of nat gas, a little bit of WTI out there. All sorts of fun to be had on the show this week. Before we go, Mr. Dan, if folks want to check out all the content you have cooking when you're not coming on a show like this, where should they go? What should they do?
Well, they could go to dangramza.com, and there I provide a free daily video. It looks at a lot of the markets that we talked about today. And if you've never traded futures, a place to begin is to look at them. Just follow them. Mark gives us so much insight to these markets. And if you want to kind of follow what's happening, then this free daily video may be a place to begin that. Or if you're only trading stock indexes, I look at stock indexes, currencies, interest rate, metals, energy, and agricultural sectors. So maybe there are some other sectors that you might find interesting. So that'd be something to check out. There's also a course that talks about the techniques that I use and a more advanced video. But a place, I think, if you're interested in finding a little bit more about futures, you may want to check that out as a reference. And again, it's free. If you want, you can get a daily email whenever I post it. you would get an email that says it's available. Other than that, you won't hear from me, and I don't do anything with the information that people put on that website.
Check him out, Dan Gramza, GRAMZA.com, the place to go to check out all of his content. He's got great videos up there if you want more deep dives into all these products we're talking about on the show. You could do a lot worse than head on over, check out what Dan has cooking over there. And while you're checking stuff out, make sure you're checking out CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires out there for all the stuff we talk about here on the show. And of course, if you like that, we are going to be joined by our buddy, Mr. Nick Howard from Bantix on the show, the creator of Quick Strike, next week. So if you want to take a deeper dive into all the offerings they have over there, make sure you go to Bantix.com, BANTIX.com, and sign up for their free trial. It's free. It costs you nothing. You can see all of the mountain of other data that they produce over there. We don't have time to get to on the show. We barely have time to hit all the movers and shakers in an hour, listeners. So there's a lot of data to be found. Bantix.com, the place to go to check all that out. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk a little bit of vol on the old volatility views. Got the once in future and now present Dr. Bix joining us on that one. So that should be fun as always. And then after that, exclusively for all you cool kids in the secret club, then we've got Options Oddities breaking down the crazy week that was unusual activity, highlighting some interesting trades that are on our radar. You're going to learn something, maybe find a trade or two you may want to check out at Options Oddities. Of course, you can check all that out for yourselves. TheOptionsInsider.com/pro is the place to go to learn all about that. Then back again next week on the Option Block on Monday, all the way through to next Thursday, and another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.